Of course, it is always, a bit of a crystal ball indeed. But when we're looking at market expectations in terms of particularly the consensus from all the analysts, especially the economists amongst the major houses, pricing in, or rather expecting the MPC to leave interest rates unchanged. When we're looking at the forward rate agreement markets, which is now, markets in terms of their forward expectations for interest rates, where they essentially try and lock in interest rate agreements in the future, they were also fairly pricing in a flat policy regime for the remainder of the year. And in fact, if you look at the curve is starting to at least see a bit of potential for some rate cuts coming as soon as, roughly about the second half of, next year. So really the expectation is for MPC to leave interest rates unchanged for this particular meeting.
Inflation, a little bit higher than I think we were expecting, and SARB is going to be comfortable with. 5.9% is where inflation is sitting at the moment. What do you think's pushed that up? Were you expecting that number, or were you expecting lower or higher?
I do think when you're looking at the volatility that we've seen with global oil prices, it was largely expected, and was one of the key risks from a tailwind perspective to inflation. That, of course, with some of the geopolitical tensions that we saw in the Middle East, we did see a little bit of jittery markets when it comes to global oil prices, and they did tick up to around 90 USD per barrel. And so obviously for this particular period, inflation was expected to tick up a little bit. But what we have actually seen as well is that global oil prices have begun to moderate a little bit as well. And I guess the key thing to note when it comes to global oil prices is that even though there are these geopolitical tensions, they do come against the backdrop of weak global economic activity.